Hi, everyone. I'm DeFi Dad. You're watching episode 11 of Yield TV. All right, there we go. We're all set. Jose, welcome to the show. Everyone, this is Jose from Delphi Digital. Jose is a partner of Delphi Digital. And actually, Jose, we probably should kick off today just talking a bit about the evolution of Delphi and how you guys got to being a fund. But thank you for joining us.
Thanks very much for having me, Travis. It's a pleasure to be here. Big fan of Yield TV. So yeah, happy to be here.
Oh man, we this is the best part. I get to part of the job is I get to talk to really interesting people. So thanks for being able to join us for a few minutes. So today we are going to interview Kenny and James, the co-founders of Shell Protocol. But Jose was kind enough to join me for the start of this because, unless you've been living under a rock, BitMEX is facing charges from the SEC for operating an unlicensed exchange. There's a lot of complexity to that too. And anyways, Jose at Delphi writes a lot about these related market issues, how they impact the greater crypto markets, really how it impacts maybe the future of DeFi as well. So yeah, just wanted to bring you on, Jose, to talk a little bit more about this identity premium you've been talking about. So anyways, can you kind of walk us through what's happened lately?
For sure. Do you want me to give the Delphi intro? You think Delphi intro?
Let's start there. Yeah. Let's talk about Delphi first for folks who don't know what it is.
Yeah, Delphi started off as a research firm. The majority of the team comes from traditional finance, but we also have some other backgrounds. Myself, I was a high stakes poker player and also an entrepreneur with a successful exit. And we have some professional gamers on the team and some kind of more diverse backgrounds. But the majority of the team comes from traditional finance and started off with the goal of kind of bridging the gap between institutions in the crypto space. Since then, the research business has grown a lot. Our clients are some of the top funds in the space, and kind of because of our research, we started getting contacted by a lot of projects who realized that since we can analyze these kind of token economic systems, because that's really where we specialize with the research, that we could also kind of help them craft and design token economic models. So kind of spurred on by our Ethereum report, where we ended up talking to the Ethereum 2.0 team about their economics. We ended up working with a bunch of top projects like Synthetics and Nervos and Aave and a bunch of leading protocols in the space. And then most recently, we launched our fund, in which we invest in the most promising ideas that we come across, the most promising projects that we come across, and then take a really active role in governance and in designing the token economic systems and really like participating to make the project better.
Yeah, we have been subscribing to Delphi for I think like 2 years now, and I definitely at one point in my life said crypto research is bullshit, and then I started reading Delphi's research, and it's been a game changer for me over the last few years. I think it's part of the reason I've gotten to know the team more is because I was so fascinated by like, why are these guys sharing all these great ideas that I'm not hearing elsewhere, and why does it seem like when I read their research, all these theses play out in the next few months. And so it's been pretty exciting. I got to say over the last year, like I learned about Uniswap and Kyber more from you guys. Like I was using Uniswap, but I understood the model of Uniswap and impermanent loss and what it means to incur impermanent loss. Synthetics, I wouldn't have known about Synthetics had I not been a subscriber. What was the other one? I learned about Rune from you guys. And I was using Nexus, but I really didn't fully understand how the NXM token plays into Nexus. So that's me. Like there's no one's paying me. I don't have any kickbacks or fees. So it's been pretty awesome.
Appreciate that. Yeah, it's been cool. So I'll dive into this a bit if you want.
Yeah. Start us off with what exactly happened. Like what are the charges that they face, and am I correct to say that the CTO of BitMEX actually was like taken in by the FBI or some sort of police force?
Yeah, absolutely. It was actually the CFTC that charged BitMEX with basically operating an unregistered trading platform and violating anti-money laundering regulations. So obviously, For anyone who's been in the space for a while, we kind of know that the KYC AML process on BitMEX was pretty loose, and they were kind of allowing U.S. consumers as well, despite sort of saying that they hadn't. So it kind of doesn't come as a surprise to people who've been following this. But I guess from my perspective, what I think that this really shows, and combined with the recent DeFi boom, is that regardless of kind of what people think about speculation, what we know is that there is like legitimate demand for open, borderless, permissionless, un-KYC'd sort of trading and financial services, right? And from my perspective, like the charges against BitMEX, just the kind of traction that BitMEX had with its products, like BitMEX was a great exchange. I mean, is a great exchange, has a great trading engine, offers like some interesting products with 100x leverage. They were arguably the first to do it. But there's a lot of other exchanges that offer that as well, right? Arguably with better trading engines, like Bitfinex is really good. Binance offers 100x leverage. So from my perspective, really the differentiator for BitMEX was the fact that they offered this kind of un-KYC'd or looser KYC requirements. And so for me, that kind of shows the demand for this stuff. And I think it's kind of got to cause investors to kind of reframe the way they look at these projects, because historically you have like anonymous teams are a risk, right? Despite the fact that this whole space started with an anonymous founder, anonymous teams have always been seen as a risk, and for good reason. Like there's a reduced information edge. You don't know what the backgrounds were, and there's reduced accountability. Like if you're anonymous, if Yield TV starts failing and you're anonymous, it's a lot easier for you to leave, right? You have a lot less identity, a lot less skin in the game, and also there's a lot less kind of at stake for you to do kind of unethical things, right? A team, it's much easier for a team to exit scam or whatever if they're anonymous. And so that's kind of one side of the trade-off. But for me, the other side of the trade-off is that when you're doing DeFi, like the promise of DeFi is an open, borderless, permissionless, kind of self-sovereign financial system that runs like parallel to the traditional one. And like, as I said, the success of BitMEX shows there's demand for this, but whether we like it or not, these kind of values clash directly with a bunch of different financial regulations. I mean, the clearest is like the Bank Secrecy Act, which means that it affects any financial agency which is used to transfer money. So arguably developers with admin keys could be prosecuted, users who create front ends, even like companies hiring individuals to work on the protocols could be prosecuted under the Bank Secrecy Act. And so from my perspective, while kind of all DeFi protocols are going to come like face to face with states at some point, in my view, I think the easiest targets are the ones that have public identities associated with the project, like for-profit registered companies with a lot of money in bank accounts, and legal entities and admin keys, right? And so for me, this is why we're going to start seeing kind of what was previously anonymous teams were shunned. We're going to start seeing not necessarily anonymous teams, but at least teams that make less use of the traditional system and more use of decentralized infrastructure from the start. So like, we've seen a lot of companies start off with like either LLCs or foundations with a plan to move to a DAO, right? And it's like, I think we're going to see a lot more companies start off as DAOs. And we've seen kind of identities and LinkedIn profiles be used to vet people. I think we're slowly, we're already seeing it, like the rise of this like on-chain kind of reputation, right? Which is like a mixture of like cross-referencing wallet activity, participation on governance forums, GitHub profiles, all of that, the tweet, even Twitter handles like DGen Spartan and stuff, right? Like all this stuff is going to make up someone's identity, I think. And then I think when you combine that with certain tools like Aragon Agreements and Aragon Court, we can start to have accountability and enforceability without the need for identities and without the need for the traditional system and the traditional legal system. And so for me, that's kind of one of the lessons from this is we really need DeFi to fully embrace decentralization and to kind of abandon some of these crutches from the traditional system that will be attack vectors as these projects get more successful.
That's really interesting. And so you're saying that really the lesson from this isn't, I guess, to lean on that crutch you mentioned. It's to decentralize further. It's to like right from the start, because this is exactly what can happen. And I don't think neither of us is defending BitMEX, but I have found myself conflicted watching this, saying, okay, I'm not going to defend some of what they've done, obviously. Like there's definitely things there to criticize, but I will say, at the end of the day, like I believe in an ethos of letting people control their money and let them do what they will, and build permissionless applications. And while BitMEX is not a permissionless application, it's closer to us than it is to like a Coinbase. Like I definitely think, like, again, I'm not defending maybe some of the unethical things they're accused of doing, but at the end of the day, like I just think people should be treated like adults and they should be able to handle their money, and that's what we're being, I feel like, encouraged to do. Just anonymous founders, if we can somehow trust them. And by the way, I'd love to have you back in the future to talk about the Aragon agreements. That's a blind spot for me, but would love to know more about that.
No, for sure. I'd love to do that. Yeah. I mean, it's like, if you're using the traditional system, like it's much more, and again, like you, I'm not defending, like not KYCing and stuff. There are loads of consequences to that, like funding terrorism and stuff like that. But I think kind of the right approach to regulation is really to regulate the places where crypto touches the real world. So the fiat on-ramps, the registered companies, all of that. And so to the extent that you're making use of traditional infrastructure, you have to expect that you'll be exposed to that as an attack vector as well. And like while BitMEX is one of them, like this has happened before. We've seen it happen before. Like Uniswap, I don't know how many people know this, but Uniswap has banned 10 countries from their front end, right? Bancor has banned US citizens plus people from 20 sanctioned countries. IDEX, decentralized exchange, was forced to implement KYC. So it's like we've seen, supposedly decentralized companies kind of be forced to comply with regulations, and that's I think gonna continue to happen for these companies that have centralized kind of parts to them. And that's not to say that's a problem. I do think like centralized entities are going to play a role in bringing crypto to the masses, but they have to comply with regulations. Whereas I think at the protocol level and at the infrastructure level, it's really important for these things to be fully decentralized, and so not to have these crutches in the real world, because otherwise, they end up having pretty big attack vectors that kind of defeat the point of what we're trying to do here.
Yeah, I don't want to fall into the same trap I've seen some of the Bitcoin community fall into, like post 2017, where no matter what happened, it was like, this is good for Bitcoin. But I do find the news around BitMEX somewhat bullish for DeFi. I think like long term, it's like, this is why we need decentralized finance. 100%. No one's going to take down Bitcoin. No one's going to take down Ethereum. So why would we leave attack vectors open with individual applications built on Ethereum? The same sorts of principles that are used to build censorship-resistant blockchains with Ethereum and Bitcoin, it needs to be applied to these applications. And 100%. So it's exciting.
And it proves out the demand, right? It proves like BitMEX is kind of evidence that there's demand for this stuff. And I think it's bullish for the DYDXs and kind of Vegas of this world that are building decentralized, derivatives trading infrastructure, because it's pretty clear that there's some product market fit there. Absolutely.
Well, Jose, thanks for joining me. Like I wanted to have you on like an entire hour, but I'm lucky we've got the Shell guys here today, so we're going to interview them. But you got to come back, because like I feel like we probably could have talked much longer here about this. It's a pretty big topic for all of us right now. So Jose, anything else to leave anyone with? I think I showed or reminded folks that they can subscribe to research at delphidigital.io. Listen to your guys' podcast, which is normally hosted by Tom Shaughnessy, the Chain Reaction podcast. That's on Apple Podcasts. And what if folks are interested in getting investment from you? Where should they reach out to Delphi?
I think PMing any of us like personally is a good place to start. Otherwise, there's a contact form on our website as well under the ventures page for potential portfolio investments. And we're always looking for cool projects that are doing interesting things in the space.
Awesome, man. Yeah, congrats on the new fund, and just to keep the conversation going. Let's bring Kenny and James on. Jose, I'll see you later, dude. I'm going to remove you from the stream now. Bye.
All right. Hey, what's up?
How's it going? There we go. Thank you for being patient. Sorry, we talked a little longer than expected, but exciting stuff. So this is Kenny and James. They're the co-founders of Shell Protocol. It's a new stablecoin liquidity protocol. What we're going to talk about, I think, is the history of you working on this, because this isn't something you started recently. You've been working on it for quite a while. And I really would like folks to understand how this differs from what already exists in DeFi. And also, congrats, you have 10 million in liquidity in less than like 48 hours. So that's pretty cool to see that on your website.
Thanks. Yeah. Wow. Where do we begin? I guess, James and I, we connected back in 2017 and been kind of kept in touch ever since. And our big focus has always been on like internet money. So initially it was like, it seemed clear that, Bitcoin had a lot of potential, but because of its like static supply, it'd be too volatile to be used as like, the base like monetary system. And so it seemed that stablecoins were going to be the future. And at first we were thinking about, okay, well, how do we design like the best possible stablecoin? And then we realized that stablecoins are to some extent like a commodity product, in that like really you can only be so stable. Like you can't get more stable than a perfect peg. And so and we also realized that there's going to be necessarily lots of different stablecoins out there. And what will really be needed, the infrastructure that's really going to be needed, is something that can kind of connect all the stable coins together and unify them into like one coherent monetary system. And so a little over a year ago, we started working on a few ideas. The first one was like mostly an off-chain system. It had a couple of on-chain logic. And what we were trying to do is like, how can we make it so that to an end user, they're using just one stable coin or just one form of money, but under the hood, there's like many stable coins. And we realized like the hard part was like the liquidity. And we were using like 0x as a settlement layer and trying to do like off-chain matching between stable coins. And we realized that was just not a very good system. And we learned about Uniswap almost exactly a year ago. And we're like, oh, like this like liquidity pool model really could be the way to do it. And so we started tinkering on a few ideas. We had something that like, it was sort of similar to Balancer, but without weights, and like had like a built-in ag layer. We were building that, and then right around
aggregation layer.
Yeah, aggregation layer. Thank you. So it aggregated many different pools together, but it was sort of like Balancer without weights. And
interesting. Okay, yeah, get you like, I mean, so it would be like routing orders through multiple liquidity pools, if that was the goal.
Yeah, and then we learned about Curve right around this time, and we saw that it had like the really low slippage for stablecoin trades. It was obvious to us that like, like the way that Uniswap and Balancer do like calculate prices, it works great if you have like, two, like a volatile asset and a stable asset, or two volatile assets, like an ETH pair, for example. This works really well. But for stable coins, you need much deeper liquidity in order for that to like, in order to be competitive. And so we basically went back to the drawing board like late January and started building from scratch an entirely new model. And sort of, long story short, here we are.
So when were you guys tinkering with 0x a while back? Like you've been working on this at least for a few years, right? Like, or you were thinking about stable coins the last few years?
Yeah, since like 2017, 2018.
And then the 0x thing, that was the previous summer of 2019.
Got it.
Put that together, and then we figured we ought to take it up to the next level and did the Balancer thing.
So then you go back to the drawing board in January, and then just coincidentally Curve launches, and like I think I'm imagining you went from trying to explain the importance of all of this to like investors and friends to everyone being like, oh yeah, of course, man, stablecoin liquidity pools, how could we live without them? So they definitely helped to prove out some of that value. What as you guys have been launching Shell, what's the goal in terms of what do you aim to improve upon based on, there's Curve, there's Swerve. Swerve is just a fork of it, and then there's mstable. How do you try to differ yourselves?
Yeah, well, I guess like our mindset isn't like to differentiate ourselves so much as, we really want to build, an internet monetary system. And so we just think about what do we need? What does an internet monetary system need? It needs really good, flexible, stablecoin liquidity pools. And so we just try to build that. And it just so happens that there's some interesting features that ours has. So first, like we have that deep liquidity, like curve. We also have weights. You can have like reserve weight assets, sort of like Balancer. And then so you can see here, SUSD is quite a bit smaller than the other balances, and that sort of represents the weight. Now it's hard to sort of see the ideal weights from the balances themselves because there's a very large range they can trade without any slippage, which is sort of just a natural fact if you have a deep liquidity bonding curve.
Guys, this is like 30, 30, 30, 10? Is that the weighting right now?
Yeah.
Yeah. Tell me, how did you choose to launch with these? These are, in fact, the 4 stable coins that I use the most, and it's great to see Synthetics USD being used in this because I think SUSD is the most important, if not the second most important, decentralized stable coin now. But yeah, how did you decide upon using those?
How did we decide, James?
Let's see.
He's most liquid. Duh.
Yeah, well, we got to have Tether and USDC and DAI in there, I guess. And we really liked the Synthetics community. I felt like they were a good role model for us in terms of how to get smart people involved with your protocol and sort of solicit and not just have them invest in your protocol, but also have them participate in ideas in the protocol. And I think just in general, there's a lot to learn from Synthetics. And so, but it wasn't SUSD, I felt wasn't quite liquid enough to have as an evenly weighted pool, at least for our first pool. And so we decided, also we wanted to showcase the fact that we had weights. So we I don't know.
I think SUSD is still, I'm trying to check what is the circulating supply here. Is that correct? Total number of SUSD minted using, oh no, that's just Ether. But anyways, it's cool. It's great to see SUSD getting used in new pools. There it is. I've got 68 million in SUSD, so much smaller market cap than DAI, which is over 800 million. But yeah, well, cool. So tell us more about so you just launched this. This is a very familiar sort of format. I've got a pool where I can swap between. Actually, here we go. I can swap between any of the 4 coins. Am I getting a 1-to-1 rate here, or is it like a curve where it's dynamic and the rate changes according to how much DAI, how much USDC, how much SUSD is in the pool?
Yeah, the latter. So if you keep it 1-to-1 the whole way through, that seems like it's great because you get this really deep liquidity on paper. But the problem is that if one stablecoin deviates from its peg, then the pool is just gonna for example, DAI almost always is above $1, and so if you don't have any slippage built in, then people are just going to take out all the DAI from the pool, and you're going to be stuck with Tether and USDC. And so if you don't have that slippage, it ends up being the pool ends up being less liquid, basically. So you need that dynamic price calculations depending on the state of the pool and how many reserves of each stablecoin you have.
And guys, you've talked to me about this once before. Can you tell everyone more about this idea of what is a shell, and is the future a basket of stable coins? Is that what your goal is here? Is to get us past using these individual stable coins and have exposure to something that represents a mix of all of them?
Yeah, exactly. So it seems rather than just having people pick one stablecoin to use, it makes sense, I think, to have individuals use many different stablecoins. And so I think having a static basket is not very efficient. And what you want is have a basket that's very liquid. Mm-hmm. And so if you think about it, a tokenized, liquidity provider shares of a stablecoin liquidity pool is basically like a liquid basket of stablecoins that's like diversified, liquid and earns like yield. And kind of, I think like the vision is there won't be like one basket to rule them all. There'll probably be many different stablecoin liquidity pools out there, for many different users and many different use cases. And so what we're trying to build is like a substrate where like, you can customize how you want that liquidity pool and that basket to behave. And then ultimately at the end of the day, like people will be using these liquidity provider shares, which we call shells, because like a shell is like container for like the living organism inside, like a real shell is. And so like these like shell tokens are like containers for what's inside the liquidity pool. And so long term, we see people using shells as the primary medium of exchange and store of value. Did I miss anything?
Like, would it be fair to say then, like what you're calling a shell, is that kind of like YUSD is a Y vault having taken like the Curve Y pool, but like just the Curve Y pool LP token, like that would be the equivalent of what you're calling a shell. Someone would say, oh, I've got a shell of these 4 different stable coins. Like you'll probably have more than just one pool in the future, and each one will have its own shell.
Yeah, exactly. In fact, I would call that, Y curve, I would call that a shell.
Yeah. Okay, good. Makes sense. Yeah, I get you.
Because like, LP shares, pool tokens, it gets, I don't know. I mean, I feel like we need to kind of create like a more clear nomenclature that like, especially some like use words that like will be more interpretable to a broader audience. And we think shells are a pretty good one.
Yeah. No, it makes sense to me. I've heard it once from you guys just when I first discovered it, and now that that term LP token gets tossed around a lot, I actually like the term shell more. What else is new with this? I mean, I
would add a little bit onto that. So shells are the oldest form of money, and that's how we intend to make our shells work as money. So we want people not just to have these different automated market makers and pools that they can put their money into and earn yield, but we want them to actually use the shells as money itself.
I got you. Yeah. And you could even combine the shells as well, right? Like shells within shells, that shellception. So kind of reminds me a little bit of like PieDAO, like if you want that diversified exposure. But in your case, if the shell becomes money, that's a huge win for you.
Yeah. I mean, there's, yeah, exactly. So like our hope is that teams like PieDAO or teams that have an idea for like, a meta stablecoin would be able to use use the shell protocol as sort of to help them build that out. So instead of having to build out from scratch the automated market maker mechanics, they could focus on whatever their value add is and sort of all that stuff they don't have to worry about. It's kind of like how like Bitcoin was like the single purpose blockchain, and basically it was just like, who owns how many Bitcoin was what it was designed to do. And then Ethereum came along and it had this like multi-purpose blockchain where you could build your own applications on top of it, and all that like hard part of like finding consensus and, ordering transactions, was abstracted away from like from the developer. And so ultimately we want to build that equivalent for like stablecoin liquidity pools. So instead of having to worry about, well, how do we, create the bonding curve? How do we like make sure that like all the internal mechanics of the AMM and liquidity pool work? They can just focus on what they want to build, and then, use the shell protocol sort of in the back end for that specific purpose.
So where do you guys draw inspiration from as builders in the DeFi space?
Wow. That's a good question. Mm-hmm. Where do you get your inspiration from, James?
He's like, I get it from you, Kenny. And you're like, where do you get it from? I get it from you, James. And you're like, man.
Yeah. Well, okay, I'll say this. So I mentioned synthetics. I think from building like a community standpoint, I draw a lot of inspiration from that. And not that we necessarily want to like be exactly like them, but I think there's just so much that you can learn from studying them. I think Compound in Robert Leshner's sort of mindset of really like, do whatever it takes to like not like lose people's funds and build, really focus on security. I think that's super important, and that's a huge emphasis for us. Not to say there isn't risk putting funds in our very brand new smart contract. So not
good. But on that, actually, while we're on that, are your smart contracts? I'm assuming are they not audited yet? Just because it was just launched, right?
They're audited. Yeah.
Oh, hey, there we go. That's nice. That's nice.
We'll be making them public like today, probably sometime after this call.
Awesome. Who is it audited by?
Consensus Diligence did the Solidity code. And then we had ABDK Consulting focus heavily on the bonding formalism.
Wow. Yeah. No, they do. I've heard a lot of good reviews from them. I did used to work for Consensus, so I guess it's a good diligence. Going back though to where you guys draw inspiration from, so with synthetics, from a community standpoint, Robert Leshner I think Robert has really set a standard of like music first. At least he did a great job branding themselves as that. Like I think of security as well when I look at Compound. Anyone else that you admire in the space building projects?
Well, we really, I would say Uniswap V1 was a big inspiration to us. It was sort of like a big aha moment. So I think that Uniswap V1 Viper code belongs in like the pantheon of like great like DeFi smart contract like systems, in my opinion. I really like the balancer white paper. I thought was like brilliant. Like just the idea of basically the whole idea that like a deposit and withdrawal is like the same as a swap. I was like, oh, that's really that's brilliant. And of course, we got to give props to Curve we weren't even like sure if a low slippage bonding curve was feasible, and then we saw that it was, and I mean we got to give credit where credit is due. I mean it's a brilliant bonding curve.
Yeah, they've done great things, and I mean this space is so new. Like I feel like it's just ripe for lots of us to win together. I understand there's going to be competition, but yeah, there's so many people that need stablecoin liquidity right now, and so anyways, like we need more than just what's in Curve, and that's why I was excited to see you guys were launching. So what is?
I would also say just real quick that I draw a lot of inspiration just from the technology itself, especially seeing our contract out there with millions of dollars flowing into it. It's pretty humbling and kind of astounding. Just all this distributed ledger technology with all the consensus going on. It gives me the chills.
Yeah, absolutely.
You guys have 12.3. Actually, let me put it back up on the screen.
We're getting a DeFi Dad boost. We were at maybe 9 million when the call started.
I need to get like a kickback. Figure out how to do that with teams. So I'm totally kidding too, but it's just cool to see that because you don't have a governance token, which is another question of mine. You've mentioned that it's coming, or it was somewhere in your Medium post there. But I think it's pretty awesome to see people participating without a governance token, without an inflationary token that is getting everybody riled up and speculating. Anyways, what is next though for Shell right now? I mean, I read in your Medium post, there was a clear reference to a governance token. Do you have like a timeline of when that's actually coming?
So I think like right now our biggest priorities are just to work out a few kinks at the current deployment. So a lot of people have been asking us to have a max withdrawal of one stablecoin feature. So we want to ship that. A lot of people have been asking us for a BTC pool, and so that's going to be a pretty big thing. People have been asking us for an analytics dashboard. We don't have APY up there anywhere. So just sort of getting sort of those things sort of buttoned down is probably the immediate priority. But of course, I think that in order to be successful long term, we need a governance token, and we need to create value through the community. And so that's going to be our number one priority. Basically, is first we're still thinking about it in sort of assessing what we want the governance system to look like. it seems like we're very fortunate in our timing, and that there's a lot of examples out there to look at in terms of like, you know, what works, maybe what doesn't work. So we can kind of look at like real world data, and right now we're just trying to like, you know, bring it all together and figure out like what are the key challenges and what are the mechanisms we want to use to deliver on those challenges.
Yeah. So, okay, so we've got lots of updates coming clearly. Like, now as I look at the exchange, I'm realizing like there's so much you can add here aside from the big stuff like a Bitcoin or a tokenized Bitcoin pool. I don't think of what else here I'd love to see come sooner, but yeah, that all like makes sense. You know, with a governance token, I would expect we'll see some sort of liquidity mining program then in the future, but again, there's no deadline on that, and that will come when it comes. Can you talk to me more about, you know, what do your investors expect of you? Like, what are their goals for this? It takes a lot of boldness, I think, to invest in early stage teams in our space, even with all the success over the last, like, you know, 6 to 12 months where we've seen the markets kind of explode with DeFi that's usable here and now. But anyways, yeah, what sorts of goals do your investors envision for you?
I think their number one goal as of, you know, prior to 48 hours ago, their number one expectation was that we would ship something at some point. It took us a lot longer. We had like a prototype of this.
Oh, you got it. You're done.
Back in like late mid-April, and so it just took a while to just make sure everything was working right and stuff like that. So I think they're just very. I think right now they're probably excited that we got something out the door. They're excited that it's doing well. Probably we'll have to like touch base. I'm sure now. Eventually, the euphoria will settle down, and they're like, okay, well, what's next? But I think we're very fortunate that, like, you know, our investors are very understanding, and you know, when we took the investment, it was very open ended in terms of like tokens and stuff like that. We basically fundraised through a traditional like you know, for profit corporation, yep. And so they own effectively shares in that corporation, and so. The goal is to eventually dissolve that and convert the shares to, you know, tokens in the protocol, and which is how like both James and I and our investors will be, you know, rewarded for risking their capital and you know, putting in our time and labor.
Yeah, it's pretty normal stuff all there.
Yeah, so in that sense, like. I think like one of our philosophies that we've had so far, we want to apply to the governance token, is that basically we want everyone to be on the same footing. So like, you know, our investors are basically on the same playing field as we are. So in terms of we're all like own shares and the same, you know, we all own the same shares in the company, and there's been no like pre-sale of tokens, so to speak.
Yeah. Well, one of the cool things over the last 6 months is I feel like a roadmap has been laid for teams like yours that, you know, you can find a way to decentralize control of the protocol. I mean, the truth is for most teams, I haven't seen anyone really launch decentralized from day one because it takes a concerted effort of a few people. So just by nature, it's centralized, and that's fine. Like I think it's all part of the growing pains of our community, and like we're doing. I think we're doing like great stuff with that. You know, it's still early days, but I mean, we've just seen some incredible sort of coordination between folks that are supporting different protocols. And I think we've got some like really long-lasting protocols working in DeFi. Fortunately for us, I think stablecoin liquidity is one that, you know, I was very grateful Curve kind of brought that to the forefront, just because it was a big problem, but you needed to see the demand to understand like how important it was, and so it's something that you guys are going to solve. I still follow MStable as a project. I think they're doing really interesting things as well. we've only got a few more minutes. What else, guys, would you like folks to know about Shell, or if they want to support you or learn more about Shell, where should they follow you?
Probably our Discord channel is the best place. We try to be really responsive on there. So just if you have any questions about Shell, ping us on Discord. Obviously, our GitHub is open source, so if you want to like dig into the code, that's the best place to start. Our white paper, I think, does a decent job sort of explaining what our vision is for the protocol longer term, and also explains like the inner workings of the protocol. So if you want to do some research, GitHub and the white paper are good places. And if you want to ask us questions, I think Discord is definitely the way to go.
I'm double checking here too. Actually, here I'll share my screen so people can see this. Here is. Oops. Let me get to this. So it's at Shell Protocol is your handle on Twitter.
Correct.
And then if folks want to learn about Shell Protocol, like on your website is
shellprotocol.io.
Shellprotocol.io. So here we go. So yeah, white paper's right there. The exchange is shell.exchange.
Shells.exchange.
Oh, shells.exchange. Okay, don't go to Shell singular, plural.
I don't know who got that domain, but it wasn't us.
Anything else here we can call out? Yeah, cool. Well, and then the Discord is right here on their website, so you can find that. I've hopped into your guys' Discord. Like, it's one of the cool things about the DeFi space is everyone is in Discord. You can get a hold of any founder. All you got to do is go in their Discord and tag them. It's pretty cool. Like, it's pretty amazing, like how accessible everyone is.
Absolutely. And one thing before we sign off, right now it's just the team is just James and I, but we're looking to expand the team. And so if anyone out there has a solid background experience developing Solidity contracts and or has a deep understanding of mathematics, we'd love to talk to you. And right now we were based in SF, but the smoke and all the drama happening in the Bay Area, we decided that we needed to take a break, and so we're staying out in Hawaii now. I'm actually from Hawaii. We found that it's much easier to focus and like get serious work done out here. So if you're interested in working with us, and don't mind coming out and visiting us in Hawaii, so we can sort of build some sort of like team spirit and rapport. This is where we're at. So find us on Discord or email us at jobs@Calorie.io.
Maybe hiring.
Yeah. Reach out on Discord. Yeah.
Yeah, very cool. I know that's so envious, or I envy the fact that you guys are in Hawaii. Like, what island are you on?
Just do DeFi, Dad.
Oh, like I was gonna say, keep that couch warm. My wife will be so happy. I'm flying 12 hours to Hawaii. It's for work.
Yeah, business expense.
Yeah. What island are you guys on?
We are on Oahu.
God, that's awesome. Yeah, that's awesome. Well, it's a proper name then, Shell Protocol, now that you guys are in Hawaii. I'm just wondering if folks had any questions in the live stream. Feel free to call them out here in the comments, but I think we're all good for right now. And then, just keep your eye on that Shell. It was shells.exchange. You just connect your MetaMask wallet, and then once you're in, you can use the swap, which is that's between the 4 tokens, or you can add liquidity. And guys, we're just earning market making fees in this, right? There's I'm trying to think, is there any other earnings right now? But it's just I'm earning a fraction of the fees that anyone is paying when they do a swap.
Correct. Yeah. So anytime, the way it works is anytime money like leaves the pool, like a small, I think 3.5 basis point fee is applied, and then there's also a dynamic fee. So whenever there's like any transaction that creates slippage, part of the slippage is retained by the pool and given to liquidity providers or shell tokens, basically.
And you guys this is now connected to with 1inch Exchange, right? I don't know if anyone else is connected, but
they're connected to 1inch, and we connected to Matcha.
Tamacha, we got to get you on Zapper exchange. Ours is a newer DEX aggregator. It's just Uniswap and Balancer, but yeah, we need to get Mooniswap, Matcha, you guys. There's so many. It's just been we've been kind of cautious too, having launched with new smart contracts, just to make sure everything's working as expected before we start adding more liquidity providers. But cool. Well, this all makes sense. What is the fee that you pay when you make a trade?
So it kind of depends. If it's like a no slippage trade, then it's just going to be 3.5 basis points. But right now, like roughly 10% of the slippage is retained by the pool. So if you have like a trade that does like 1% slippage, then the fee will be about 10 basis points plus the 3.5.
10 basis points. And isn't Uniswap is 30 basis points per
Yeah, or is it 30 or 25?
I think it's 30 maybe until they activate the protocol fee.
Oh, okay. Yeah.
Yeah, cool. No. Yeah, low in terms of fees. I mean, all of this is new and just got to figure out what's working and iterate on that. So, I mean, at the end of the day, it's not the fees that any of us have ever paid to a protocol. It's the fees to Ethereum miners. It just gas was so high. And that's another cool thing. Like, fortunate for you having launched now, gas prices have come down. And, they're high compared to where they were 8 months ago or 12 months ago. But it's pretty cool to see it come back down below 100 today. It makes DeFi a lot more accessible for newbies, for anyone, not just newbies, but anyone who's not willing to spend $15 or $100 in gas.
Yeah, now we can afford to use our own protocol.
That's right. Yeah. Well, guys, thanks so much for joining me. Love to have you back. Congrats on your launch. I'll be, watching and following you on Twitter. And please, if you have any big news or announcements or just product launches in the future, just message me, and we'd love to have you back on to screen share and show it off so you can explain it to everyone.
Yeah, thank you so much for having us. We really appreciate it. And we'll have a Bitcoin pool out there soon.
Keep that couch warm for me. I got to come surf with you. So
absolutely, I'm doing a surf break right out here. Actually, total coincidence.
Yeah, it looks amazing outside. I just, oh man, I'm so jealous. I love Hawaii. That's amazing that you guys are living.
I think it's going to be a great environment to really work our asses off.
What would be really funny is if I showed up and then you're like, oh, you brought your kids, and I was like, yeah, dude. Yeah, they're here. We're gonna go surf, and then you guys,
oh, Dad, don't you understand?
They don't. They go to bed at 9 or 10 o'clock. They wake up at 6 o'clock, and they scream until they get their way. It's like the antithesis of the lifestyle that you're living right now. But anyways, guys, congrats again. Thanks for coming on. Thanks for watching, everyone. We'll be on tomorrow at 12 Eastern with Marguerite de Courcelles, who is known as Coin Artist. She's going to talk to us about personal tokens tomorrow. So everybody, have a great day. Thanks for watching.